Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the 4 hour chart on Bitfinex, guys. And wow, this has been very, very interesting. And I want to start off by saying be careful. This price is just basically ran the gamut here. We know that I told you in the past, and if we look at again volume profile, the majority of trading in the last couple months has taken place right in. I mean, there's no question. We look at volume profile, we can see it has all taken place right in this zone here. Price seems to keep coming back to this zone. If we expand that zone to the upside, we can see it sometimes comes up, hits off this 6750 to the downside. It comes down, bounces off 6100. Now, of course, there are exceptions here, but generally, this is where the most of the trading takes place. And when it kind of zooms out, it kind of touches here, comes right back, kind of touches here, comes right back. But this is where the majority of it takes place. We just had price inside of about 45 minutes run all the way from, we were sitting at about 63.30. Price came down, touched this the prior bottom of 6100. Almost a perfect double bottom over here, not quite, but went a little bit further down, but hit our 6100 support that I've been talking about perfectly, just a perfect hit. So almost a perfect double bottom. Price came back down. I told you if price broke below 6280 by very decisively that it was more than likely going to fall to 6100. I told you 6100, this prior low had to hold. I said if 6100 broke, we were coming down much lower. It didn't. We got a very strong rejection off 6100. The bulls just pushed it right back up, came all the way back up, hit the top of this zone here at 65.40. So, again, within about 35-40 minutes, we've run the gamut here between our all the way from 6100 all the way back up to 65. It was actually about 65.46. So, I mean, just incredible, guys. All happening very quickly. So this is an extreme, obviously extreme manipulation. We can see volume came in here very, very quickly. And price was finding resistance. As I pointed out, it's been interesting how this extending our what was support has been now acting as resistance here. It bounced off there a few times and finally just broke right above it very decisively. Came up, hit of course our known resistance at 65.40 that's been in place forever that I've been telling you guys on all my updates. There's strong rejection off that. And where are we now? We're right back to trading within that range between 62.80 and 65.40. I say be careful, guys, because I mean, this was clearly market makers trying to run stop hunts, trying to manipulate the market, trying to scare people out of their positions. If we come over here and we look at short positions, guys, we can see that short positions, when price initially fell, when we initially fell down to 6100, I was monitoring shorts and shorts just spiked. And for the most part, they've held on to their positions. Now, a couple people looks like they got out, but for the most part, shorts have held on to their positions. We're still sitting here at near all-time highs, if not at all-time highs, on shorts. Long positions, they still remain about the same. If we zoom in here, we can see longs have started to, started to rise very, very little, but again, I mean, relatively speaking, we zoom out, nothing significant at all. Obviously, retail believes this market's going to go much, much lower. So if you are a market maker, how do you remember, guys? Trading is a zero-sum game. For those that don't know, this is zero-sum. Everybody can't win. For one person to win, somebody else has to lose. That's just the way it is. There's only, everybody can't make money, or there'd be no money. So it's why it's called trading. So anyway, guys, yeah, for someone to win, someone else has to lose. So market makers, if the entire market is going to make money, when I say, obviously I'm exaggerating, but if the majority of people are betting the market's going to go lower, so retail investors think the market's going to go lower, and if it does, they're going to make out like bandits. What are these market makers going to do? Well, they're trying to, I believe with all my heart, as I told you guys, that market makers want to get price down, but they can't. The only thing that's holding price up are these long short positions, or these, that's kind of interesting, are these short positions, these stacked short positions. This is the only thing that's holding price up right now, because market makers know if price drops, retail gets to make their money. And again, this is a game. They want to make money. Market makers want to take your money. So they're trying to scare people. We've been manipulating. They're trying to scare shorts out of their positions. And to retail's credit, they're holding strong. Retail is getting smart. So what's going to happen next? We ended up running this gamut. Everybody thought that price was going to collapse. They pushed it right back up. Price very quickly came back up here. I'm sure they were trying to get people to enter long positions, and of course that didn't happen. Now we're right back where we began, basically. Right, and I find it interesting. Price still is finding, the body of the candle is still right back at that resistance point of this ascending resistance line here, right back where we began, right back trading within this range. So I say be careful, because clearly market makers are getting desperate. Clearly they want something to happen, and nothing is happening, and it's getting frustrating. As far as when I say nothing, I mean retail. They want retail to get out. So I don't know if this is going to turn into a massive short squeeze. Obviously, just based on this, retail is not going to go away. They are holding strong to their short positions, and where are they going to have to drive price up to trigger these stop losses to close out these short positions? Well, in my opinion, a lot of these short positions were entered all the way up here. So, I mean, if they really are going to squeeze people, now I'm sure they've adjusted along the way to take profit. So, let's say that maybe they adjusted their stop losses. More than likely, it would make sense to me. They'd probably put them up here at about 67.50, somewhere thereabouts. Maybe even sit here. As I told you guys, I'm watching this 7,000 area, because if I go swing high, swing low, let me just pull it here as I showed you guys this last time. If I go swing high, swing low, we can see that this area right here at about 69.50, 7,000, that's the 618 fib level. And we know the last 3 times when price retraced, this time here, this hit perfectly on the golden pocket, which was between the 618 and the 65 fib, which is right here. In the time before that and in the time before that, it all retraced here. So if price retraces here and breaks above it, that's going to be a trend change. That's going to be a bullish trend change and may signal a bull run. So retail probably, if they're smart, if they enter their short positions up here, they've adjusted their stop losses somewhere in this area. If it were me, I would put I've closed my shorts. I'm done. I'm out of the market at the moment. But I would put my stop loss right above here, because if we break above this zone, that would break that bearish trend and possibly signal a trend change, possibly signal a longer term bull run. Doesn't mean that has to. I'm not saying that's definitely the case, but it's certainly an interesting, and it's certainly a logical place to place my stop loss. So my point is that they're going to have to drive price up at least, and I'm speculating here, at minimum up here to about 6,800, 68, 6,900, somewhere thereabouts, to trigger at least some of these stop losses. And I'm not even sure that'll do it. So are they really willing to push price up? Because if they do that, remember, volume is still so low in this market. If I come over here and I look at Bitcoin, volume is still sitting at, even with that last push, we're still sitting at about 4.4 billion. That's very, very weak. As I told you guys last time, to signal a bull run back in January and December of last year, January of this year, we were getting volume well above 10 billion per day, 10, 20, 25, sometimes 30 billion per day. That was average. So until we start seeing an average daily volume of above 10 billion, you're going to know new money's not entering the market. And to have a bull run, we need new money to enter the market. So my point is, if they start something that looks like a potential bull run and new money starts entering the market, as they're just trying to do a short squeeze to close out those shorts and then drive price down, they run the risk of triggering an actual bull run where retail floods the market with new money, which would trigger a possible longer term bull run. And I do believe before institutional money gets in, because remember, ETF approval is just a matter of time, in my opinion. So before ETF approval, I do believe that market makers want to bring price down so they can get in at a much lower price before the floodgates open. So they run the risk of, do they want to run a stop loss to try to liquidate shorts but potentially trigger an actual bull run? Or are they just going to be content running this thing down? I'm saying, guys, just be very careful at the moment, because I can see this thing running in either direction or just moving sideways. And I know as an analyst that's frustrating. I mean, that's brilliant, right? You're hearing me say, price could go sideways, price could go up, price could go down. Literally, there's nothing else it could do. And I understand how frustrating that is, especially hearing it from the so-called analyst. But right now, I mean, look at these wicks, guys. This is a complete standoff between retail investors and market makers, and I can see this going and breaking in either direction. My point is, wait for a good signal. Wait for a decisive break above 65.40, potentially even 67.50. That might trigger a longer term trend change. But honestly, I wouldn't even enter a long position at that point, guys, because they could turn right back around. I would wait until you break above this zone up here. That would be a real bullish trend change. If I was shorting the market, I'd be looking to short at about 67.50, not enter a long position. That just in my opinion. But if we do break above 65.40, I think there's going to be a quick rise up to 67.50, in my opinion, and that's going to be a very strong resistance at 67.50. But if that breaks, then we're coming up to this next resistance level here, and this is the key level we got to get north of. If we can get north of this level, we'll call it 7,000 because that's a good psychological number. Then we could be in for a longer-term bull run. To the downside, I'm still watching 6,100. If 6,100 breaks, I think we're going to come down to at least test the prior 2018 lows, possibly create the 2018 lows. It'll all depend on how price reacts if and when it gets down there. So at the moment, guys, I would be sitting back, hands off. Again, not financial advice. You do whatever you want. But I can honestly see this thing running in either direction, a very strong short squeeze or a complete fake out and price just dropping. So I would just hands off at the moment, wait and see where this ends up, guys. Remember, wait for the trade setup. If you wanted to place a buy order down here, possibly thinking they're going to bring it back down and shoot it right back up, like they did here, that's potentially a possible order. But I really do think that if you were going to do that, you should have already done it. As I told you last time, this is the zone we were going to test. If it broke down, it's already been tested. I think if it comes back down again, it might just keep going. Doesn't mean that has to happen. Just means, and if you wanted to play that again, that's a good possibility, guys. But I would personally, I'm sitting on the sidelines and I'm waiting to see how all this plays out, guys, because this has just been a very just a crazy, obviously manipulative move on the part of the market makers. We're looking at our 4-hour moving averages. We could see, sorry, this is longs. There we go. Now we're looking at our moving averages here on the 4-hour. We can see price just broke above the 21-day EMA. We're looking on the 4-hour chart. It's testing now the 55. We can see it broke above. It shot back down. If we can get above this 55-day EMA on the 4-hour chart and close above it and start trading above it consistently, that's going to be a very bullish sign. Looking at the daily, with the daily, we're just now coming above this 8-day EMA. If we can get above the 21-day EMA here on the daily, again, that's going to be a very, very bullish sign. If I can get the daily candle to close above the 21-day EMA, that's going to be a very bullish sign of strength, guys. So just sitting back and waiting at the moment. Wanted to get this out to you. I know it's not the traditional analysis that I give you, but I just wanted to give you an idea of what was going on in the market. Warn you that literally anything could happen at this point, and I would just kind of sit back and wait and see how this all ends up playing out. So anyway, guys, I'm going to wrap it there. In case you have any comments, questions, or suggestions, please let me know in the comment section below. As always, I would appreciate an upvote, resteam, or like, depending on where you're viewing this. Until next time, guys, please trade safe. Take care of yourselves. This is Working. Signing out.